There we go. So we were looking at the yields. When we came into the session, the yields were looking like this down here, and we were looking for that correction. We got that correction, and the dollar, subsequently sold off, and that gave us the opportunities in the Sorry, I was laughing there at Cynthia's smiley face, me being a donut and not sharing my screen. So, and that gave us the cues for shorting, well, going against the dollar, right? So those commodity currencies that are correlated to risk appetite did well. So on this, when we were talking this morning, the market was round about here, and I explained that we were looking for the top of this rally to short, so for the long squeeze, and that's what we got. And then I'm going to run through this again quickly, and I'm recording this so you can go over these points at a later stage if you want. But essentially, what we were doing at 7 in the morning, the market was around about here. It started to move up and up and up and up. It was really running away. And when you get a market like that, it's steepening and steepening. Well, at some point, that's going to even out and come back to the mean. And in this case, is that trend line, that micro trend line, whereas the broader trend lines are based from price action lower down and those support structures, and they can be a target. So for me, this here was a giveaway that we're on the cusp of consolidating. So consolidating, trapping traders that are chasing this. They're coming in to the New York session. They see everything is dollar bullish, and they're seeing that we're taking on 135, or that must mean it's going to go through. So that's the psychology that we're trading against. And when you see this start to decelerate, as I keep saying, you're looking for the deceleration and then the price action to accompany that deceleration to give your entries, and your targets can be based on structure lower down. In this case, for me, the structure was down here, um, aligned with the trend line supports. Um, so, and the first mouse often gets caught out. So trying to sell it when it's breaking down, it's a bit premature. You want to wait and see how things pan out. At this juncture, we had the support structure that could not get through. Okay, so given that it couldn't get through that support structure, I mean, here you'd be selling if you're feeling that, well, this is a sell-off, I want to get involved. Well, before long, you're going to have to tackle this. And given that it's only just started to sell, there's nothing to say that can't keep going up. It hasn't broken down enough structure yet. However, once you get that failure at a lower high, which is being put on, so if we come in here and start looking at that on the playback, so you're looking to see if this is going to breach and continue up, and it doesn't. And you get a very strong momentum candle, and this is starting to form a topping pattern with these wicks, rejections, and then that break of structure is confirming that this is a higher higher probability trade setup for the move lower. Okay, so let's just take that out of replay mode. So that was the entry, that was my exit. I left money on the table, but so be it, and it trickled all the way down. Someone's asking how. Yeah, well, depends on what you want to do. If you want to hold on to these overnight, for me, that just disrupts my lifestyle, and I want to make my money be done and move on, and look for the next setup the following day. So holding on to these trades is not really what I want to be doing. This for me is it's not a swing trade setup. It's it's a scalp, it's a fade, and it's taking an opportunity when you see it in and out. Whereas, for instance, if we look at the dollar yen, we talked about that swing trade that we were in. This is something that you can hold on to. This was based on a daily chart, and that's something that you need to hold on to. Otherwise, you're never going to make any money. But this, for instance, is like a 2-for-1 risk, but it's taking days to develop and progress. Whereas you can make that times 2 or 3, and you can do that all in a trading session. You can make 6 hours in a trading session on one trade. If we go to the Aussie, this as well played out. We were talking about the um, opportunity to fade the short. So we've got these shorts from Friday breaking out today. So this was the second day of shorts. This was an inside day, so you don't count it. So this was a failure at last week's high. On Friday, it failed to continue up and it closed lower down, and then we continued. So what we can tell from that is that there are shorts in the market, and naturally the market is going to rebalance itself, it's going to correct itself. Shorts are going to start taking profits and so on. So that gives you the opportunity. When you see the market starting to turn, so when we're in New York and we're coming in and we're seeing that the whole day has been short, well, at some point there's got to be a correction. Well, it doesn't have to be, but the likelihood is that there will be a correction. So we're in anticipation of that correction. We're sitting on our hands, we're letting things develop. So in this case, on the 15-minute chart here, you had this sort of W formation, double bottom, whatever you want to call that. So here we were breaking this lower high. So at this point, so if we replay this, so we're coming into the session, 8 o'clock in the morning now, New York. So we've been at our desks for an hour or so. We've monitored that as being a swing high, and we're waiting for our cues. So we're looking to see, is this, so this is now starting to break down. So the thesis is, okay, right, now we're starting to decelerate. The market is showing us its cards that it's about to make a move. But when are we going to get involved? So this is on the 15-minute chart. Now, often that first break will fail, and you want to be buying low. We've talked about this in the education section and so forth. So this is exactly what we're waiting for. So we're waiting for that discount and a second attempt, similar with the CAD. When we had that peak formation, we needed to be patient and let it play out. So just because it's breaking doesn't mean it's necessarily going to fly. You can put some money on the table. You'd have to have a very wide stop, or you just be patient and wait for it to come into your preferred area, and that is down low. And in this case, it was a series of these wicks. We need to see that. We need to see this sort of confirmation, and then this big engulfment. Yeah, and then off we go. So this was, I entered this on the 1-minute chart, in fact. Ross, can you explain the sterling yen? I've been very stubborn waiting for bearish trend. Yeah, we can look at that. I must have done it in 5 minutes. Right, okay, so we're going to go over and look at. Right, we're done with the commodities. Let's look at when do you see gold coming back to balance and correcting? Let me have a look. Gold gave us a buy. Oops, Come on. Oh, what's going on here? What have I pressed that I didn't want to press? What is this? Oh, this is the ATR. Right. So I want to come out the ATR. How do I do that? Don't know. What's going on? Uh, that's going to be out there. It's black. Gold, 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 gold. So there was a scalp, 10 o'clock scalp, came back low. Right, so we got the peak formation uh, just ahead of the Wall Street Open, half an hour before the Wall Street Open, and we got that burst to the upside. Uh, yeah, okay. So bullish, while on the backside of that bearish trend, which is broken, counter trend line. So we've had Friday longs failed. What was the high of the week? Last week up there. So that was day 1, 2, 3, 1, 2, 3, 1. Day 2. Day 2 could be a runner to the downside. It hasn't failed to make fresh lows. So thesis here is that we're failing to break last week's lows. We've pulled down breakout traders, squeezed them out, pulled them in again. A lot of false activity down here. So tricky one, but I would be looking for longs on Wednesday to move up into. Well, we've actually come up into all those shorts. So how much is left on the table? To the downside, let's have a look. So I'm looking for the money at this point. I'm looking to see where. Let's clean up this chart entirely. All these drawings. Well, it looks like tricky one. We're testing last week's lows. We so therefore I'm in anticipation of move up, but we've already had that spike up today. So just go with the flow, I would say. And we've come up corrected, so we're bearish for lower lows on the daily chart. On the 4-hour chart, I'm just wondering whether we're gonna, if this is a false break of the weekly lows, and are we gonna come back up? We've already cleared out the imbalance on this candle here, Cynthia. So let's look on the 15-minute chart again. Well, at this juncture, we just need to be patient and monitor this. There's nothing that's jumping out at me other than that we're on the selling side of the market as we've not broken any real structure yet. Oh, well, we have actually. Apologies, hold on. So we broke that. Well, yeah. So we've broken here. So in that regard, I'm going to flip the script on this. Keep that bullish. As we broke that structure, that lower high, come into so potential opportunity for going long. Um, inside day, there's going to be money above that inside day up there. And then going left, what are we looking like? Gold looks heavy but hard to sell at current prices. Indeed. We're going left. We're in this support structure. This support structure was the result of breaking all of this high over here. And bang this. Yeah, so we'll have to see. I mean, we've got shorts in the market and they need to be cleaned out at some point. This is an area of support, demand area. So I wouldn't be surprised at all, and I'd be putting my money on a move up into this area of potential resistance and leaving money on the table for a clear out up here to the origin of the sell-off over here. Okay, so that is my thesis at the moment. Now, if we do manage to break these lows, but convincingly, then we're likely heading all the way down to our initial target area, which I believe we spoke about last Friday, or if not, it was recently. We were measuring this correction, a daily correction up into here to target 1912. 1920 was what we spoke about this morning. Didn't quite make that. We got 22 the low, around that, 22.80. Okay. So there's still some dollars here on the table for the downside, but you know, as you've said there, Gatica. Where are you from, Gatica? Is that Hatica? Hatica de Maria Ramos. So yeah, hard to be selling when the market's already heavily short and treading around what could be thin ice, but what could also be rocky grounds for a foundation to move up. So sorry, I can't give you anything definitive there. Um, I'd rather look for setups that are screaming out at me, like that Canadian and Aussie this morning. Anything is possible. We could visit 1892, of course. Where's 1892? We're down over here. Yeah, absolutely we could. I mean, essentially what this is a weak low. It's looking like a weak low because this is a lower high, right? So uh, that is likely to be the path of least resistance because this is the trend down. We haven't broken this structure over here. It remains solid. So this is overall bearish. But for me, I'm not a long-term trader. As I said, I don't want to be holding on to stuff forever. You can make as much money day trading and be done with it. I'm looking for the market is fractal, so what you see in the longer term time frames, you can drill down to the lower term time frames and apply the same analysis, looking for the same nuances in market structure and the opportunities in price action and market structure. So that's where we are for now. I'm on the fence with this. The jury is out whether this is a continuation or if we're going to get this clear out before the next move down. That would be my best bet. And for that to happen, we need the dollar to continue sinking. So if we get this correction in the yield and then another sell-off, then that should be enough to fuel that bullish thesis. So correction low up, sorry, impulse low, correction up into test resistance, continuation lower, resistance, further resistance, get rid of that now, more resistance up here in these yields. Okay, thank you, thank you, okay. Um, did someone ask for sterling yen? Yep. Sterling yen, sterling yen, sterling yen. Where are you? So daily chart, sterling yen looks like it wants to head higher. So you've got this impulse, correction, impulse, break of structure over here. Right, so you've got change of character really. Looking to head higher. Coming to support. Same setup. Look, it's exactly the same, almost exactly the same. You've got that potential break here. So you've got the rail tracks and a potential break. That would be carving out the bullish bias. All right, on the 4-hour chart, the hourly chart. Looks like it wants to be tailing off to come up. It's M formation, sort of. W formation, not M formation. So that's a prospect for going higher. Um, Waiting for a bearish trend, right? Well, if we need to see near-term structure broken, which was in fact down here. Okay, let's flip the script on this then, so we can look at that from a bearish angle as well. So, from that regard, we have a break of structure here. A very strong pullback up into the highs. So if this acts as resistance, then we could be looking for the downside continuation. Doesn't quite align with the daily outlook at the moment, though, does it? But you've got support over here that you'll have to overcome. So jury's out on sterling yen as well, but in terms of the where we are in the weekly template, So we're looking for day 3, perhaps working the high, pulling up traders into last week's highs, and then maybe a sell-off for Wednesday. Or we're just sideways. But anyway, we're looking to see what happens on the day. So we're opening in Asia up high. Will Asia keep that going, or are we going to see a breakdown, pop up, breakdown further in line with that original breakout? So you could be right here. If that's the intention of the market, we've got all these longs to target. So perhaps we're heading higher to come lower. Okay, any other pairs we want to look at, guys? I mean, this sterling yen is going to be another bullish close. So this was the first green day in that bearish trend, and therefore the opportunity was to buy low. We got that opportunity. That break of structure late in the day. Okay, all good. Now I've posted, for anyone that's interested, something I'm going to look into, which I tested out today on the Nasdaq, and it served me well up until the point that I was looking for a 3R return, and I had to bank it at 2.5, a little bit less than 2 on the entire trade. But essentially, it is something that can be used. I think it's probably going to perform best on the Nasdaq and the S&P indice, but it's something for those that might not have all the time in the world to be sitting at the screen and want to trade the New York session. You can do it in Asia and London. I'll have to look into it for you, but it's a very simple strategy done on the 5-minute chart. I explain it in the video. I put it in the educational channel, and I'm going to do some back testing on it. But essentially, at the open, you're waiting for an imbalance in the market, and that's it there. And this indicator gives you that signal. It's called the ICT Silver Bullet Lux Algo, and it's pretty nice. It seems to be probably maybe less than a 50% win rate, but on a 2-to-1, that's not bad. But again, I'll have to do the back test, and I'll do like 100 trades on it and see how it works out. But essentially, that's a cue. When you get that price imbalance, the that indicator will show that, and then you can put your entry at the height of it and your stop loss slightly above the highs of that candle. It's a 3-candle setup, and you're looking for the entry on a sell limit in this case, and that went to target. So that was all over and done with within less than an hour, really. So that may not be typical, but we'll give it a go. So I've put it in the educational section on Discord if anyone wants to check that out. But it's 10 o'clock New York open, and that's essentially those are the rules. Very, very basic mechanical trade system. Any questions, guys? Or otherwise, we'll wrap it up, and I'll take a deeper look into the currency board and perhaps put a second market watch list video out, and that will be set up for us for tomorrow morning. We can review that and see what developments have come of it. I think Wednesday could be a particularly busy day ahead of US Thursday CPI. I think there's perhaps potentially some opportunities that we can look at, so I'll delve into those, and we'll see you, and we'll do it all again tomorrow. So have a great afternoon, guys. Thank you for coming. Okay, JJ, thank you. See you.